Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 9th of October 2020 and we're talking China. How it is developing a faster coronavirus pandemic economic recovery, outpacing most of the world and leaving even the United States far behind. So let's take a look. Yesterday, we published a video entitled, How the Mega Rich Are Benefiting from the Current Global Crisis. And in case you haven't heard it as yet, we've placed a link in the description box below. Now in it, we highlighted that one of the consequences of the coronavirus pandemic has been the need for central banks to lower rates and ease the path to available credit, which many mega wealthy people in the United States and around the world have and are taking advantage of. As so many of us, though, do not necessarily fit into that mega wealthy category, though we know some of our subscribers do, the day-to-day reality for many may seem somewhat different. Rather than purchasing a new condo or 6,000-foot apartment, many are wondering whether they can still afford to keep their existing modest home, having in some cases lost their jobs and health benefits. Now, a couple of months ago, when the United States gradually eased or came out of lockdown, the economy began to pick up. But with coronavirus infection rates now increasing, and the number of deaths beginning to rise again, a number of states have not only slowed down their reopening program, but have started to lock down again. We in the United Kingdom are certainly experiencing this as we produce this video podcast. Now this is having a dramatic effect on trade, though so far it has not fed through to the economic figures as yet, and certainly not through the equity markets. However, we are beginning to see gold prices in the background slowly but steadily begin to rise again, with gold now today having moved from $1,887 last night to its current $1,914, and silver too from $23.79 when we produced yesterday's video to $24.38 currently. Not bold moves, but we are beginning to suspect a slight trend reversal back upwards, albeit slow and grinding. It's not cast in stone. You may have to wait for our weekly update tomorrow before we give next week's prediction. But all that said, what we are experiencing here appears to be somewhat different to what's being experienced in China. Economic reports are suggesting a relatively strong resurgence of growth. And whilst all of us know we cannot always believe the information which comes out of China, we can, to some extent, using traditional and familiar metrics, see that their situation is improving. Now, we wish to make clear, abundantly clear, we are no fans of China. Its human rights record is appalling. It still has enormous levels of poverty, and its history of stealing intellectual property rights undoubtedly has not corrected itself. We also hold the opinion that, to use a British term, its chickens still have to come home to roost, meaning that the economic consequences of its past actions will eventually catch up with it. But for now, as it has been in recent years, it appears once again to be an economic powerhouse, leaving the United States and most of the Western world far behind. Now, you don't have to take our word for this. We're going to share 3 articles with you. The first one is published by Shuli Ren in Bloomberg Businessweek magazine, so you won't see it online, entitled China Has Its Own K-Shaped Recovery. The second is a CNBC article dated the 7th of October entitled Trump says US economic recovery is faster than any other country's, but China is leaps and bounds ahead. And the third, a report published today, in fact, by Al Jazeera, entitled Here's More Evidence of China's Strong Recovery from Coronavirus. We shall now play these back to back, but please do not be too alarmed. They're all relatively short in length. Bloomberg Businessweek magazine, dated 5th of October, Europe edition. Article entitled China Has Its Own K-Shaped Recovery by Shuli Ren. Quote, China doesn't care about its bottom 60%. The country seems to have bounced back from the COVID-19 slowdown. Exports are growing by double digits, and retail sales, which have been lagging for months, are back to pre-virus levels. With daily life mostly back to normal, the country seems to be humming again. But poorer households are still struggling. The rebound Beijing engineered is K-shaped, exacerbating widening income inequality, which was already a problem before the pandemic. Most households in the bottom 60%, or those earning less than 100,000 yuan or $14,670 a year, said their wealth declined in the first half of 2020, the China Household Finance Survey finds. Those earning more than 300,000 yuan, which is 3 times that figure, reported net gains. We get a glimpse of the upper tier's confidence from sales of luxury items. High-end autos are doing well, and Chanel, Louis Vuitton, and other brands raised prices this year. This has happened in part because China's fiscal stimulus is different from that of the United States. Beijing feels it has more control over businesses than consumers, so it stimulates the economy by building new bullet trains and 5G telecom stations. There are no equivalents to the $1,200 check from Uncle Sam or the $600 per week enhanced unemployment benefit from the Treasury Department. China went for trickle-down economics. The country's decision to aid business owners rather than workers may have long-term repercussions. Of its 442 million urban workers, more than one-third, or 174 million, are migrants. They mostly work in low-paying jobs in construction, delivery, manufacturing, and restaurant services. When those industries were shut down, migrants not only lost their jobs, but also failed to collect unemployment checks. With their hukou, or permanent residency, tied to the rural areas, in Beijing's books they were never employed in the cities in the first place. They were just going home to farm. The economic loss borne by the poorest 60% could be as much as 1.35 trillion yuan, or $198 billion, estimates Gavikal Dragonomics, a research firm. Some continue to be underemployed. In August, sales from the catering industry, which employs about 12 million migrant workers, were still down 7% from a year earlier. China's urban unemployment rate has come down to 5.6% in August from February's 6.2% high, the Statistics Bureau proudly proclaimed. This figure is likely a big understatement. Migrant workers are hardly present in the government's urban survey. Make China a cautionary tale for Washington. If the political impasse over stimulus continues, the US will end up in the same situation, with the wealthy wondering whether work from home means they should sell their Hermes ties while the poor scramble to survive. A K-shaped recovery is worse than a U or W-shaped one. End of article. NBC News dated October 7th, 2020. Headline: Trump says US economic recovery is faster than any other countries, but China is leaps and bounds ahead. China's economic growth is in double digits. Japan's Nikkei index is doing better than the Dow, and South Korea's unemployment rate is almost back to pre-pandemic levels. The US is leading the world in economic recovery, President Donald Trump claimed Tuesday on Twitter, a declaration that economists were swift to rebuff. It is tenuous at best, Nick Masing, Director of Research at the data provider Centio, said in an email. Several measures of economic recovery show that the US has fallen behind China and several other major countries during the global coronavirus pandemic. With a national unemployment rate of 7.9%, the US is faring slightly worse than most other developed countries whose jobless rates average 7.4%, according to the latest data from the Organization for Economic Cooperation and Development, otherwise known as OECD. There are countries with better unemployment rates, however, including the Netherlands, Germany, South Korea, and Japan, where the national rates are from 4.6% to 3%. Those countries' aggressive coronavirus containment plans reduce their infection rates faster than the US has been able to. Trump's claim is supported even less by other measurements. China leads the world with reported growth in gross domestic product of 11.5% last quarter over the same quarter last year. The US lags far behind at minus 9%. Inflation in the US, a measurement of price increases for consumers, stand at 4.6%, compared to an average of 3.9% for other OECD countries. That means American wages aren't going as far to cover bills. Wall Street has largely recovered its pandemic losses. At Tuesday's closing bell, the Dow Jones Industrial Average was at 27,772 points, close to its pre-pandemic peak of 29,000. Good news for corporations and their investors. Yet even here, there is a global market that has fared better. For the year-to-date, Japan's Nikkei index on the Tokyo Stock Exchange is up by nearly 1%, while the Dow is down by 1.3%. Some forecasts do point to a very strong Q3, Masing said, but we do not know how this compares globally for the quarter that literally just ended. End of article. AlJazeera.com. Headline: Here's more evidence of China's strong recovery from coronavirus. Dated 9th of October 2020. The country's services sector continues its rebound from the depths of coronavirus lockdowns as companies also add jobs. Quote, the recovery in China's service sector activity extended into a fifth straight month in September, an industry survey showed on Friday, with hiring increasing for the second month in a row. The Kexin Market Services Purchasing Managers Index, PMI, rose to 54.8 from August's 54, the highest reading since June, and staying well above the 50 mark that separates monthly growth from contraction. Recent economic indicators ranging from trade to producer prices have all suggested a further pickup in the industrial sector, adding to the demand recovery from the coronavirus-induced slump. Many analysts expect China to be the only main economy to mark positive annual growth in 2020, although at decades-low levels. The services sector, which accounts for about 60% of the economy and half of urban jobs, had initially been slower to return to growth than large manufacturers, but the recovery has gathered pace in recent months as coronavirus restrictions on public gatherings lifted. Firms hired more for the second month in a row, although at a still modest rate, indicating some recovery in a labour market that has been hit by sharp falls in demand and epidemic restrictions earlier in the year. Domestic demand drove new orders, with a survey showing new export businesses received by Chinese services firms slipping further into contraction in September. The services sector's post-epidemic recovery showed signs of speeding up, said Wang Shi, senior economist at Caixin Insight Group, in comments released alongside the survey. Service firms remained optimistic about business prospects as the economy continues to recover from the coronavirus lockdowns, with a sub-index for confidence in the year rising from August. The Chinese government's official PMI, which focuses more on large state-owned enterprises compared with the mostly private sector assessment of the Caixin Market Survey, also showed activity in China's services sector expanded at a faster pace in September. China estimated that 13 million railway passenger trips were made on October the 1st, the start of the Golden Week holiday, the highest for a single day since the coronavirus outbreak began in February, according to state media. However, this figure is still well below the 17 million trips made the same day last year. So, whether we believe the data coming out of China or not, and whether China's recovery is all that it is made out to be or not, there does, for the moment, appear to be the view that its recovery is moving much faster and further than ours. If these figures are true, and the West fails to deal with this pandemic quickly enough, then China will be vaunted as the most powerful economy in the world, even above that of the United States of America. This, of course, is not what any of us wish to hear, but sometimes we have to acknowledge that just because the news is bad, it does not make it wrong. Perhaps the light at the end of the tunnel, though, is that if China is genuinely recovering and beginning to increase its manufacturing, though services seem to be the growth area currently, then this will undoubtedly turn the tap back on again for gold and silver demand. Of course, it will still have to find prosperous markets to export to, but nevertheless, the Chinese dragon is one that we should all always continue to watch. Now, tomorrow we shall be publishing our weekly update, and then on Sunday the second part of Peak Gold. Meanwhile, thank you so much for listening. Do share your thoughts, and if, of course, you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.